Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Megan Brantley, Vice President of Research at Folio. Megan, welcome back to the show. Happy Friday.
Thanks for having me again, guys. Happy Friday.
Happy Friday. Happy Friday. PayPal, this stock just severely underperformed over the last couple of years. You know, it seems like, you know, with over 400 million people using, one form of, their ecosystem, that they'd be doing okay. Growth numbers are there, but it just doesn't seem like there's that growth or monetization in this company. What kind of data do you have? Does it deserve to be, in the penalty box?
Yeah, so whenever we look at this name, I think this is just such a prime example of a first mover in a space that kind of dropped the bag a bit. And we're starting to see signs at a high level that some of the bleeding is stopping. If we look at just overall PayPal mention buzz, and this is counting all mentions for PayPal and its subsidiaries, including Venmo and Braintree, which we'll talk about a little bit later, but we see that down by about 22% year over year. The good news is that this used to be worse, right? This year over year decline, that loss of momentum was worse. And then we do see signs whenever we tighten up that moving average a bit that it's starting to get better. So maybe some of the bleeding is stopping there just in terms of overall consumer buzz and loss of momentum. And a lot of that, whenever we break this down by brand, it's being bolstered by its Venmo arm, which is its peer-to-peer payment system, and also Braintree. And that's an ecosystem that helps companies be able to process online and mobile payments specifically. Whenever we look at web visits, we see overperformance in Braintree specifically. And I think this is really positive, or can be a positive point for the company moving forward, because this is an area that's growing and that is seeing positive traction. So this is kind of, how we're looking at it from a high level perspective. I'm interested to see what you guys are paying attention to as well.
Megan, I think of PayPal and I think they make revenue off of transactions, right? But they don't have a card to swipe like Visa and MasterCard. But every time you shop online, they should be similar to Visa and MasterCard, right? Because when you shop online, they get fees from each transaction. Plus, they got Venmo. They've got peer-to-peer stuff that's the Cadillac of that industry. Why isn't this name doing well? Why have they stopped growing? What ball did they drop? Because it appears they have. Because in a digital currency world that we live in now, they should be doing so much better than they're doing.
Yeah, 100%. I think that one thing that they did do well is its acquisition of Venmo and really bolstering that brand. That does seem to be performing well and has a high level of happiness among consumers. But where we really see, in our data at least, mentioned struggling is in its PayPal brand. Whenever you're going to check out, it's a little bit harder to check out with PayPal, or it seems like it is, versus other things, especially on your iPhone. If you're just checking out on mobile, just a quick click and a face scan and you're checking out. So I think that there's some hurdles there that the company is trying to overcome. But, whenever we look at overall happiness levels, though, and this is perhaps our longest term indicator that things might be starting to turn around for PayPal, we see overall those happiness levels are up by 6 points year over year. So maybe some of the changes that leadership is making are working. And we also see, whenever we break this down on a brand level, and we often compare this to Block or Square and Cash App in our ecosystem, we see that PayPal and Venmo are now starting to trend higher than Square and Cash App. And this used to be flipped. So this is something definitely to keep an eye on, potentially a first spark or sign of life of positive momentum on our front.
Now, on the competition front, Megan, I'm going to push it over to other competitors in this space because, as Kevin mentioned, it's transactions, right? Now you've got Apple with Apple Pay. You've got Google Pay. That's competitors where, hey, if I'm looking at something online, all I have to do is double click for Apple Pay and it gets paid. I don't need PayPal at all. Is that a concern, especially when you see the PayPal mentions are so far above where the stock's actually trading in your other chart?
Yeah, that is probably our biggest area of concern is for this PayPal namesake brand. And because of the competition, like you mentioned, another name that we see growing really well, especially on a web visits front that's not on any of these charts, is Shopify. That's another easy, click to shop pay. And we're seeing a lot of consumers utilize that option. So it's definitely something to watch. But I do think PayPal is an enormous company. It's obviously processing, billions in transactions. So I think that this is still a name that it's not quite time to give up on it yet. And so we're starting to see, like I said, those positive signs of traction. Perhaps some of the bleeding is done, and there could be some room for optimism, especially on the long-term front. And we're still about a month out from earnings.
Yeah, management also making some changes, trying to tighten up the organization of the business, also tighten it up more along the lines of the Venmo part of their business. Real quick, last thing, Megan. You guys got a big game tomorrow. I know you're a big Alabama fan. You guys are getting an 11.5 points. Can you beat Connecticut for me? Because my Boilermakers, we do not want to see Connecticut in the final.
Well, my goodness, I hope so. That will be who I am cheering for, obviously. Got to sign off with a Roll Tide.
Well, I hope we get to see you guys in the final on Monday, but we'll have to wait and see on that. All right, great stuff. Have a good weekend, Megan.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at Likefolio, breaking down